All right, welcome everybody. Let's get started. I've got a new computer today and just wanted to go ahead and try it out on a new MacBook Pro. And so if you can hear me, let me know. Give me a little thumbs up and make sure my computer audio is working sufficient. Good. Looks like I'm being heard. All right, so today, guys, welcome to the trade findings and adjustments for September 24th. This is the Hurley Investments broadcast, and I am Keith Bybee. I hope you like my nice little logo I put on here. Make things look super duper special and legit. Um, so today I just want to take a few minutes and go over a couple things. A Tuesday bit of a sell-off, and you know, it's starting to be that time of year. So any news headline gives everybody a good excuse to sell off. And today, it was Pelosi coming out and saying, "Yeah, we're gonna go ahead and try to impeach Trump." Surprise, surprise. Uh, with that, really the best thing that I want to recommend is what we can do to protect a portfolio, especially if you have more in the way of long calls and option spreads, as well as kind of how to do that without having to cause so much expense with buying puts to protect call positions, that sort of thing. And before all that, I wanted to touch base on a couple of the things that we talked about a couple weeks ago when I was with you. I believe we mentioned a bull call on Baidu. Whether anyone did that or not, it was I believe fourth month of October bull call that I had recommended. This is a Baidu chart right here. Inspect. So around the 10th, I believe, it had broke above our 50-day, and we had good news coming out that trade deals are being worked on, and it really never took off from that and fell all the way down to today, below 100. So in that event, we've got a short call above a long call that you would hopefully, if you had done this, rolled it down, or closed the short call rather, and are looking for a good place to dollar cost average. This had happened in a similar way back here before an earnings, and they dropped dramatically. And we had September long calls and had to cash those short calls in for tripling down, I believe, is what we did on long calls. And that really never went anywhere. And last Friday would have closed for a loss. It ended, rather, expired. So, thinking about those couple of things, I hope that if anyone has done or listened to those, I would hope that you would still stick with it and look at possibly doing longer term, out to a year or two, of calls, leap long calls in Baidu like we've done in our account. just so you get more time to try and come back there. And if you have done just the leap long call positions, we're looking at a great opportunity to go ahead and dollar cost average those. Just as an example, we swipe over here and show you our position. 135 long calls, trading around $2 today. I believe we had come in $11 or $12 on our original leap long calls on these ones out to June 20, and had dollar cost averaged them to lower our cost basis here. $6.45, and I would expect that we're going to see Baidu probably fall all the way down to around 85-ish. If it doesn't hold way down here, kind of where it bounced before, around 94, 95. So that's what I would be looking at. Again, some of the spread trades are shorter and they don't always work out, but the key is sticking with it, and if you need to, giving yourself time for it. Any questions on those ones? I think I had suggested a Ford short put. Look at that real quick. Again, I kind of wanted to just follow up with some of the things I had gone over just because I'm here. September 10th. So yeah, I suggested a short put, which I believe was around, what, 13 cents or something. The next day, if you had gotten in that, you might have gotten filled closer to 9 cents. You would have, in the next couple days, been profitable and could have taken that off up here at the top of our range, which is what I had suggested. And of course, bouncing down from the 50-day in this technical range and what Kevin described yesterday as somewhat of a pendant type shape, where you can kind of see this, this type of thing going on, coming into a V and ready to break out one way or the other. That's how that's going. It was nice to see it bounce right on 9. And then there was an Under Armour. Of course, I need to take my pen off. Under Armour was a covered call. I believe up around 21-ish. And it kind of depended, as I talked about it, on where it was the next day. This would have been the 10th. So on the 21st, you might have got into something around the 21 or 22 capped covered call stock with a cap and a little bit of protection, which would have helped as it came back down. We talked about the $20 being a support level, which we broke through. So if this was something that you hadn't gotten called away from or hadn't booked a profit on, you'd be looking at probably adding puts and turning it into a full collar trade tomorrow is what I recommend. And I would expect to see this probably go back to test 18, especially since I believe we had good Nike's earnings, which sometimes will affect our Under Armour negatively. So that's what I would think about. So what do I want to talk about real quick? What moved the markets today? We were positive this morning. Good futures last night. It indicated some a continued trend upwards. And what we got around 10 my time, which is Mountain Standard Time, 10:30, stuff started to fall away, and Nancy Pelosi came out and said, "Yeah, we're gonna go after Trump and try and impeach him." Trump. Okay. Exclamation points. Yeah, we're going after him. Why? So we know why Democrats are wanting to impeach Trump, but do they really have a leg to stand on? And what does it even all mean? So let me see if I can describe this in a way that is understandable in the way I understand it, is that when Biden was vice president, it looked as though he allegedly used his position as vice president to put pressure on Ukraine to sack a what was the position? It was a chief prosecutor, something like that, that was going after a company that Biden's son was a chair on their board. And obviously there's not a ton of proof of that. Otherwise, there would be maybe more of it. But that was the reason Trump then said, or allegedly said, hey, maybe we should think about withholding military funds support for Ukraine if they don't go and investigate that whole situation. So a quid pro quo on one hand and a quid pro quo on the other, and Democrats are ignoring the one and hoping to get Trump impeached for the other. So with all of that mouthful, personally, I don't think that's going to go anywhere, and I think it's just going to be another thing like the Mueller investigation, where they're just going to play it up and say, yeah, Trump's getting away with murder, and it really doesn't have to be true. It just has to make him look bad and help their political situation, and hope to help Biden and all of that wonderful political vitriol that we all love. So, any questions or thoughts on that matter? To be honest, I really, hopefully, I'm not coming across with a certain position or bias one way or the other. I'm just saying I don't think that's truly going to be something that is impeachable, is not going to go through, and that I don't think Democrats care. So that's what I think on that. Whether or not I think, whether or not I'm right doesn't matter. The market moved from it today, and it seemed to be a good excuse to sell off a little bit. All right. So if you were on last night, you probably, hopefully, you remember Kevin talking a little bit about some of the headwinds. We do have a GDP number coming out this week, which could be positive, could send things the other way. But in all reality, it makes more sense to me right now to find some protection. So on that note, trying to think of other things. So we've got the end of the quarter we talked about. We don't have the Fed put anymore, meaning quantitative easing has ended. There's just a few things that, of course, the September and October down months, a few things that justify certainly having some protection. So what I'm going to suggest for today is QQQ puts. QQQ is the ETF that follows the NASDAQ. NASDAQ being the most tech heavy. Breaking a 50-day support here and plenty of downside. So along these lines, I'm just thinking about, in a trading account, you've got spread trades and hopefully some long call positions that give you more time, that when we do reach a more of a bottom after a sell-off, these through these typically down months, we can dollar cost average, like I discussed with Baidu, to catch wind of a Christmas rally. So, not protest. QQQ puts to protect a trading portfolio. Q's trading just under 188. So let's check it out. So maybe you're thinking, why Q? The main reason is I assume most people are have a somewhat tech heavy account. We've got Baidu. I mean, I guess you could argue Disney's a tech. V is more of a fintech. Facebook, tech. And of course, on our portfolios that we manage, we have plenty of Apple. So I guess the other reason is it tends to move a little quicker as opposed to something like the SPY. But I mean, if you're not so concerned with being, if your portfolio, your trading account isn't necessarily tech heavy, then maybe you'd think about an SPY. But I kind of like the fact that the Qs are a little cheaper typically. Is probably not today just because of how much further they fell. You can see 139 as opposed to, or percent, 1.39% compared to a SPX of 0.84. But that could mean it could be cheaper tomorrow. And really, I like that it's a cheaper index, ETF, and those puts tend to move a little quicker when things fall. So back to our trading. Let's see. I would think we would want to look closer to the November month, unless we're really not getting what we need. But November 188. I'm actually going to suggest you could go for a 185. Why go under? Well, so remember, this is a protection for the whole portfolio. I don't necessarily want to, my thought process is I don't necessarily want to spend too much since those are expensive. But again, if it continues to go down, you're still going to do quite well. And you'll have a bit of protection for your portfolio and make up some of these downward weeks, especially this week. So I'm going to go for that. We have a 39-cent delta here compared to if we went at the money 44.5-ish to spend. You know, 70 cents less. I think that's worth it. And what you're going to go over is how many, I guess, what you would need. Question coming in: what date was the session on protective puts, how to make them profitable? Are you talking about when I discussed QQQ puts before, Ida? Or are you talking about something that Kevin went over? While I'm waiting for you to respond, let me just put this together real quick. Okay, so more like 60 cents. So we're going to hit the ask, buy for this type of portfolio. I think one for $430-ish. I think that's pretty good. So I would expect it being a little more expensive tomorrow. So I'm just going to go on the highish side. Ida, I'm not hearing from you, which means maybe I'm a little confusing. If you want, go check out just the last few minutes of yesterday's market commentary from Kevin. I think that he discussed that a little bit, puts and making them profitable. Check that out. I think you'll find that. If not, I apologize in advance. All right. Any questions with this? And just to check things out, I want to see what's happening. We're actually looking at possibly an update tomorrow. Bouncing back a bit, which means that we could probably actually go for 428 limit. Just a decent mid where if it comes up a bit, it's not going to get filled immediately, and maybe looking towards just being able to market it in at a good price, or if you're okay letting it sit and see if it gets filled at a good price. Buy one November 15th, 185 put at 428 limit. Good till canceled. Obviously, if things really start going back up the other way and we get great news, if you still have a good till canceled limit order, go ahead and close that out so you don't get filled for some reason. But I'm going to put that one in, and it could help a little bit if things continue to go down. And hopefully that helps Kevin's account here a little bit. All right, Ida, I'm hearing back for you. Okay, no, about 2 sessions ago, I had remarked that I tend to lose rather than gain on protecting puts, and I think Kevin said he would do one on Monday, which I might have missed. So I 95% sure he went through something like that. I thought he did, but some of the things I think he mentioned was giving yourself more time, going out a couple months or a little further, where you're not going to just lose money on puts that are less than or close to a 30-day till expiring, or if it's more high volatility, like a day like today, you'd go a little further out so that you basically, for the same reason, you don't get as much volatility crush the next day, where it might bounce back a bit, and that kind of thing. But check out the last two. I think I'm pretty sure that's what he went over. check yesterday's and maybe Thursday's trade findings, and I think you'll find something on that. I'm pretty sure. If not, then maybe just ask him again Thursday morning. He should hopefully send you the right way. All right, guys, any questions on protective puts as far as what we're doing with the QQQ? Let me go back down to that order queued, just so you can see it again. 185 out to November. That gives us a bit of time. More than a month, closer to 2 months, where we're not necessarily going to get so affected by one, volatility crush, and being too close to the expiration where you'll get bleed off from that as well. Let me take a picture. Guys, any questions on any of that? While I figure out how to get this placed correctly. No, it's not gonna let me do it. All right, fine. I'm going down here. All right. Question from Abraham. Do you check correlation of QQQ to the portfolio? I mean, I kind of do. I mean, I sort of mentioned that with if you have more of the tech heavy portfolio, then think about that. But the reality is just if things fall down, it's going. Your puts on a QQQ will typically be profitable faster than the SPY, just because it's more volatile. So that was really more my thinking on that. If it goes down, it's going to really look great. Any other questions, guys? I will scroll down here so you can see it again. And of course, it is something you can adjust in the form of adding short puts later. I just thought, and under the, speaking of short puts, maybe closer down to, 180-ish if it reverses and heads back up. But I would be looking to close, if things did fall, around the 180 range for a profit. If we get a couple days where it's trying to hold on to the 50-day, or if it really starts going back up and testing our all-time highs here, you can think about adding even a 184, just so it's under the strike price at 185, a short put. You might not get that much depending on where and when that happens, but that's just an option to do if things head back up. I wouldn't suggest doing a bull put because it was supposed to be protection. I would err on the side of leaving it alone through a few volatile weeks and couple of months. You also have the option, if you're okay, spending a little more money to get right at the money and doing a 187, 188, probably closer to 188 put in the same month, November. You saw those, it was like 60 cents more. That's kind of up to you. It's definitely going to do a little bit better going making money if things fall down, but again, that's something I can leave up to you. I chose the 185. 188s would definitely be easier to adjust if things head up and there's some really fantastic news that you feel like would justify that. You could add 186 or 185 short puts and still be under your 188 long puts to still be in a bear put spread to help pay off some of that premium. No problem, Abraham. Guys, is there any other questions or concerns or thoughts or things that I missed? As far as some feedback for my benefit, do you like this split screen type view here? I know it's on my laptop, so I don't know if it's showing up kind of small for you guys or how it looks, but it just allows us to look at a chart, look at what we're talking about, pretty easy, and cover up some of the dumb advertisements in the back. And of course, switch to our trading broker house here. It's okay for me. Looks good. Perfect. Well, guys, if there's no other questions, I really appreciate you being with me tonight. And yeah, hang in there. Think about the puts on a portfolio for trading with the Q puts. And for me, it would give some peace of mind. And hopefully it will help a portfolio out for you. If there's no other questions, thanks again. I will see you Thursday, probably listening in with Kevin.